Hey everybody, Chuck Barone here. It is Wednesday, January the 24th, 2024, the day before, right? Because tomorrow we're going to get GDP numbers. Those will be huge. We'll see how that comes. Friday we'll get the Fed's PCE, and we'll see if the inflation numbers are working to our favor. So the next 2 days pretty important. Today kind of a quiet day, but still lots to talk about here. Before I get rolling though, let me take a half a second and of course welcome everybody to the show. And as always, thank you guys for your support. You guys being here, watching these videos, hanging out with us a little bit of time every day keeps the show going, guys. We appreciate you. All right, so let's talk about markets today. Well, we know that tomorrow's the big day, tomorrow and Friday. We're going to get some really important information. Not so much for us, I don't think, but to give us an indication of where things are by the numbers the Fed follows. I know that not only everybody watching, I shouldn't say everybody, a lot of people watching this show, myself included, a little bit skeptical of the numbers the government puts out. But they're the numbers we have to work with, and they're the numbers Wall Street's working with. So believe the numbers or not, they are I guess if you don't believe they're correct, you can place your wagers accordingly, right? But the stock market and the bond market and the analysts on Wall Street go by these numbers. So we're going to get some important stuff the next couple of days. So today, kind of one of those days where the market doesn't really have much direction, just placing their bets on what they're going to hear the next couple of days. As a result, we got mixed markets today. The Dow falls 99 points, sitting at 37,806, still a good strong number for the Dow. The NASDAQ gains 55 points, 15,481. And the S&P ekes out a 3-point gain, 4,868, another new record for the S&P. Breaking records every day, guys. The broader market up today, the Dow down. I guess the market, we had some really good news on earnings. Netflix came out today, picking up a shit ton of subscribers. Then came Tesla's numbers, which kind of put a little bit of a wet blanket on the party. So you had these mixed results. We'll see how it looks tomorrow going forward. Bond market today, bonds selling off, not in a major way though. You have the 10-year up 4 basis points, now at 4.18%. That's a pretty big jump from about 3.6 where it was a short time ago. The 2-year now back up, also up 4 basis points today, 4.38%. So now it's really narrowing now, right? We got 20 basis points between that inversion for the 10-year and the 2-year. It's gonna get normal soon, guys. The Fed as the Fed starts to cut rates, you're going to see longer rates rising. I think the bond supply, the government, and everybody's pushing at the bond market right now, going to force longer term rates up, depending on what the Treasury is putting out there as far as their offerings. The dollar today coming down a little bit, just down 21 basis points on the index, sitting at 103.29, still a good strong number. The dollar just kind of basically been sitting there between 103, 104. It's been up a little bit, down a little bit, no way breaking out either way. Metals today having a kind of a mixed, weird day. Gold falling today. Gold down $15.30. Now sitting at $2,014.60 for an ounce of gold. Silver rallies up 22 cents. Now $22.64 for an ounce of silver. I guess these are still okay prices. I'd like to see silver, and I believe it's going to get to 25 pretty quick. Gold over 2,000. As long as we can hold that number, gold looking pretty strong. This dollar is what it is. It's going to keep pressure on precious metals, and we're seeing that happen here as neither one can really break out at all. Oil today gains again, up 97 cents. Now sitting at $75.34 for a barrel of West Texas Intermediate, just a little above our number. We're seeing it between 70 and 75. I believe that's where it's going to end up. This is 34 cents above the number is not what I would call a breakout, but we'll watch this because it's been stuck in this trough for a while now. I would want to believe that the tendency for oil would be to the downside, but we'll see what the market says. Bitcoin today rallies up a little bit, been really getting beat up, but rallying today up $550 $39,740 and change for Bitcoin. A little bit of a bounce. Bitcoin had been beaten up. I think it's lost about $10,000 in value. It's pushing up toward 50,000. Then the ETF came online, and people have been doing a lot more selling on that ETF than been buying. So the pressure has been on Bitcoin to the downside. A little bit of a bounce today. Of course, we'll see where it goes. It's been a little bit more interest rate and inflation sensitive than a lot of people thought it would be. We'll see where it goes with the data we get coming later this week. All right, so let's talk about news you guys need today. Just a couple of quick things. We know tomorrow we're going to get our GDP number. It's a big deal. It's going to be for the fourth quarter of last year. Experts calling for 2% growth in the fourth quarter. That would be down from 4.9% growth in the third. We'll see if that gets adjusted. Let's see how close they come. They've been way off, way off so far in their guesses. The GDP Now tracker from the Atlanta Fed says 2.4%. These guys lately have missed the calls on, well, not just GDP, but on a lot of things by a mile. Blame goes to the Fed rate hikes for the decline in GDP. They said that the hikes are finally taking hold in the economy. I don't know, guys. That just sounds like a bunch of bull crap to me, because you got retail sales flying in the fourth quarter, shocking the market, right? You got record levels of debt. We talked yesterday about the buy now, pay later, increasing retail sales in the fourth quarter by 14%. So all of this stuff there, going to be interesting to see how all that translates into a 2% GDP growth for the quarter. We'll see what was holding it back, because it seems like spending was higher in the fourth quarter than in the third. So we'll see. We'll get all this data tomorrow. We'll talk about it in detail tomorrow. Also today, Fed coming out with their dot plot stuff. Now what this is, it's basically the opinion of 19 Fed governors, the 12 voting members and 7 others, on where interest rates will go this year. The Fed dot plot shows that the Fed expects 3/4 point rate hikes this year, which will bring the Fed funds rate down to about 4.5, 4.6%. But I got to see it, because the market forecasting twice that, forecasting 1.5% decline this year, down to under 4%. It's going to be interesting to see who's going to win this tug of war. The market used to say all the time, don't fight the Fed. It seems like the stock market now intending to do just that. The Fed kind of showing where they're going. I mean, these are more than just hints, right? And, the market has what it wants, I think. The Fed kind of being a little more realistically, we've talked about this on the show, that typically for the Fed to cut rates, you need the economy to be going backwards. You need fear of a recession, which we have, in spite of the economy going okay. And typically that's when the Fed is going to move to cut rates. They don't cut rates just because they raised them, okay? They're typically going to need a reason. So far, with retail sales, with the jobs market, with business earnings, and everything we've seen, there's really no reason for the Fed to cut rates right now, other than that's what the market wants. Of course, talking for myself, as I certainly would like to see that. It would certainly help with interest rates on mortgages, which is where I make my money every day. So it would be nice to see the Fed cut. I kind of want to cheer for the market here, but the realist in me says you probably should believe what the Fed is saying over what the market is hoping, right? And lastly today, this was really interesting. You guys heard of this quiet luxury last year, where the trend was to, splurge and spend, but to do it quietly without all the braggadocio or the big, the Louis Vuitton symbol all over, the logo all over your stuff. Well, now there's a new trend, and it's one that warms my heart, guys. It's called loud budgeting. Have you guys heard of this? Loud budgeting? Well, this is the new trend. It's going viral. And it's for, young people kind of showing, young people create these trends, right? Now, I must say, I like this one. It warms my heart. Young people are embracing a more frugal, conservative lifestyle with less spending and more saving. Yay, young people. Wow, they're finally getting what a lot of old people, my generation, baby boomers, never got. The idea of living on less than you make is a noble one. And it's certainly a way, you want to know how to maintain a lifestyle? Live on less than you make. Right? Typically, people are going to earn more as they go through life. So if you condition yourself while you're young to living within your means, it certainly is much easier as you're old and your earnings tend to increase. You can spend a little more, you can save a little more. Now, I got to say, these young people kind of got it together, man, okay? Loud budgeting actually celebrates saving and making good financial decisions. So now you're seeing these memes and these videos where young people talking about, passing over the experience vacation to stash the money instead, or to buy the store brand rather than the name brand. Or if you need a new handbag, you don't got to get the $2,000 or $3,000 Louis Vuitton. You can get a more simple bag and still have a brand new bag, right? So it's really kind of cool with me, out with all the statusy stuff and the loud logos, and in with more savings, fatter savings and investment accounts, right? Goals are now getting out of debt and saving to buy a house. Well, guys, this is the stuff that I've been preaching on this show since the day we started it almost 2 years ago. So I gotta say, the world's finally catching up with us, guys. I certainly advocate for having nice things. I drive a pretty nice car. I live in a pretty nice house. I have all the material crap most people could dream of having. But I never did it at the expense of stashing a few bucks here and there, right? And now, saving money actually being celebrated, people talking about saving, people talking about interest rate and how it affects their savings, how to invest. The stuff we've advocated on this show, to save a certain portion of your income. We've recommended 10% if you can save that much. To not add on any new debt. To continue to pay down, even if it's $5 or $10 additional, paying down the existing debt you have. To invest your money conservatively. Don't reach for big returns. Risk, the definition of risk, the way I was taught, is probable loss, right? So be cautious with your investments. Spend your money, but don't spend it foolishly. Get rid of the impulse stuff. Get rid of the want. How it is as you get more money, the wants become needs, right? But I think this is something we should celebrate. And if I talk to young people, I'm going to be talking to them about why this is such a good development for them. I mean, let's face it, guys. If you don't have some money put away, if you don't have a stash, at least your FU money, which I've talked about from the very beginning of this show too, right? This is a special account. We recommend trying to save up as much as you can, but capping at $25,000. You should not need more than that. The way I was taught, this account is just in case you ever need to tell your boss, F you, right? And the way my mentor explained it to me, and it made sense and still does, that if you live your life correctly, you should never have a crisis that $25,000 won't solve or won't get you through. Whether it's losing a job, breaking up with a spouse, or whatever the emergency is, typically you can get through it for far less than $25,000. But $25,000 pretty much was the number we agreed would get a person through anything. So this is the strategies we've been advocating since we started the show. The world finally catching up to us. I got to tell you, man, this is such exciting news to me, because maybe this could be a trend where the country, we used to be the #1 saving country in the world. Nobody saved more money than Americans. And Americans had money to buy anything they wanted. They just didn't buy anything they wanted. They bought the stuff they needed to have. And everybody goes for that one or two special, oh, gotta have it for a year, right? But they were sensible and they did the right thing. And that's why they bequeathed to our generation what they did, right? And now we got the baby boomers actually creating, this is going to, they said, the first generation that will not do as well as their parents did before them. Well, I think that if this trend of loud budgeting is going to actually take hold, who knows, they might actually surpass their parents, baby boomers, and even millennials, not known for being great savers. Anyway, guys, that's it for the day. Tomorrow's a big day. We'll be here to bring you the news you need. Big GDP day tomorrow, plus other kind of data coming. We appreciate your support as always. If you could, guys, please hit the like button. It changes our algorithms around, gets the video out in front of a few more people. We appreciate your support, like I got to say it a million Brazilian times. We're back tomorrow. Until then, guys, take care. Thanks.